When it comes to selling your home, the moment offers start coming in can be as exciting as it is nerve-wracking. And, let's be honest, the goal is to sell on your time frame for the highest amount possible. However, always going with the highest number can lead to contracts falling apart and wasted time and potentially money. So what are those 3 things to consider in an offer? Firstly, the financial reliability of the offer. The highest bid isn't always the best if the financing isn't solid. You'll want to look for buyers who are either pre-approved for a mortgage or, in an ideal scenario, those who propose an all-cash offer and offer a proof of funds. Pre-approval suggests that the buyer is serious and their creditworthiness has been vetted by a lender, reducing the risk of the deal falling through. Second, consider the letter itself. How much is the down payment? Although that certainly doesn't mean the buyer does not have extra cash on hand, could it imply that they may ask for tons of repairs to be done? What about the company that has given the letter? Is it a bank? Oftentimes, a trusted loan officer will be much easier to work with. And if you have a specific closing time, the transaction is more likely to be smooth. Third, contingencies included with each offer. Common contingencies involve the buyer selling their current home, securing a mortgage, and the outcomes of the home inspection. Fewer contingencies typically mean fewer hurdles in the way of closing the deal. However, don't dismiss offers with necessary contingencies out of hand, as these might still be worth considering, especially if the buyer's timeline and your own align nicely and they are financially reliable. An important point in this market is if they have an out in the contract for appraisal. If you are selling your home for around its top value, can the buyer cover any gap that come up between the appraised value and the sales price? If not, you could be back at the drawing board. Bonus. One good way a buyer shows how serious they are is through their earnest money deposit. A larger deposit generally signifies a stronger commitment to the transaction and serves as a good faith gesture. It is often harder for them to get this money back if some part of the transaction goes awry. Therefore, having a larger EMD can make you feel more at ease with an offer. So use these tips to make the best decision on your sale. Enjoy your summer. See you next time.